This is the Buried in Work podcast, where we share tips and interview experts to help you simplify estate planning and end-of-life tasks.
I'm your host, Adam Zuckerman, and today we have a very special guest, Peter Culver. He's the co-founder of Freedom Family Office. It's a firm that's built by entrepreneurs for entrepreneurs, designed to help them produce predictable income, build their legacy, and create their ideal life. He has a wealth of experience in financial planning and wealth management. He has started not one, not two, not three, but 4 financial services companies, and he's even an author of 2 books. With that, Peter, it's great to have you here today.
Adam, thanks a lot. Looking forward to it.
All right, so let's start off. Personal journey. How the heck did you get to where you are today?
So that's interesting. I think looking back from today on what it has come to be, the dots do connect, but when I describe them, they may sound like they didn't. So skipping over maybe the first 15 or 20 years, I was trained originally as a lawyer, went into private practice, practiced law for about 12 years. Most of my clients were entrepreneurs. And since you're a lawyer, you probably know this paradigm, but you start out with a bunch of clients, and I was young and they were young. So you're doing contracts and operating agreements and things like that. A lot of my clients were in the real estate industry. Sooner or later, a couple of them actually make some money. And so they want some guidance around tax mitigation, estate planning, those kinds of things. So really right from the beginning, the world I worked in was business owners and sort of the integration of business and let's call it life planning as opposed to death planning, right? I know we're going to talk a little bit about that. I had an opportunity to help a client start a trust company as the lawyer. And when the process was completed, someone said, well, you created the whole thing and we need somebody to run it now. So why don't you come and run it? So I just literally almost crossed the street. But basically, I went overnight from being a practicing lawyer to being a business owner. And I wasn't in that world for more than a week, and both because it was business and I just knew I'd never go back to practicing law. So in a variety of iterations since then, I've either worked, and it's interesting, both for startup or more boutique type wealth management firms, also for 2 extremely large firms, State Street Bank and Trust Company out of Boston and what's now known as BNY Mellon all over the country. But about 7 or 8 years ago, having stayed in the corporate world longer than I thought I ever would, I thought my end game has got to be going back to having my own business. So I teamed up with a guy I'd worked with probably for about 15 years. That's my co-founder, Noah Rosenfarb. And nothing's ever a total straight line, but essentially what we decided to do was, could we create technically Freedom Family Office is an RIA, a registered investment advisor. Mm-hmm. We decided intentionally to focus on business owners. And I think if there's one thing that's a little bit unique about what we do in our day-to-day work is, so we do all of the things that registered investment advisors do. We do financial planning. We do investment management. We have a heavy focus on tax reduction. And we help people, part of our subject today, with designing estate plans and sometimes a complementary tool, the use of insurance in that regard. And we're active in what's called the exit planning arena. I think, which does in some way, I think, key into what we're going to talk about today is, to us, all those things that I just mentioned are tactics. Mm-hmm. What we try and focus on as much is the strategy, which is the average person doesn't get up in the morning and think, I want to become a financial planner. I want to learn about all that stuff to create what we call my ideal life. So if I close my eyes and say 5 or 10 years from now, what do I want my life to look about? What's interesting is most people don't talk about money. They talk about where they want to be, who they want to be with, what they want to be doing, those kinds of things. So what we're trying to do is marry or use our technical skills in those areas I mentioned to help people get from here to their ideal life. And part of that is making sure that whenever that ideal life comes to an end, they have their house in order for their own benefit and for the benefit just as much of their family.
And that's one of the questions that certainly depends on where you live. Coming from Washington, D.C., when somebody asks you on the East Coast, what do you do? Generally, it's this is my job. Your identity is,
Right.
how you're bringing money in. But when you go to places like Santa Barbara and California, Denver, oftentimes, what do you do? It's, I go mountain biking. I have time on the weekend to do
Right.
this. And I think what's interesting about what Freedom Family Office is doing is helping people on either coast with either ethos put together a plan that has tangible steps as opposed to a concept of I want to go here, I want to do this without having any specific action points of what needs to be taken. So let's talk about that. In your books on the site, you talk about living rich beyond money.
Right.
What are some of the tangible steps that you would advise entrepreneurs in taking? Because entrepreneurs are a different beast than many other business people. Their most valuable asset is oftentimes time, and they think that they can multitask better than anybody else.
Yeah. So I would say a couple of things, and one is a challenge. So keep doing what you do really well, but understand, just like you probably understand in your own company, delegate to professionals who know how to do stuff that you don't know how to do. That's sometimes a challenge to get them to cross that divide. I mean, maybe I could just describe for just a couple minutes how our process works. That's kind of our first message would be. So we begin with what we call the end in mind, which is what does your ideal life look like? And we actually start our whole process, not with numbers, not with dollars and cents, not with any of that, we need to get clear about what their ideal life looks like, but we want them to be clear about what that is. And so it's a visioning exercise around, hey, Mr. and Mrs. Client, close your eyes. It's 5 years from now. It's 10 years from now. If you could wave a magic wand and money and time were no issue, what would you be doing? What's interesting about that process is you might think that because most of our clients are business owners, they would say, I want to have $25 million or $20 million or $100 million. And they might have goals like that. But when we take them through this exercise, they talk about the quality of life, not so much the quantity of life, right?
Do you think that is a function of these individuals already having achieved a certain level of success? So it is a correlation and not a causation. So they've already answered many of the questions that so many people have of, am I going to be able to retire? And I imagine that the clients that you're working with have already passed that threshold of yes. Now it's a question of what, not if.
So I think the basic answer to your question is yes, with two maybe nuances. So we have any number of younger clients that may not have gotten to the ultimate point of wealth that they want to get to. So we're not just helping them vision where they want to be, but we're really trying to help them get to where they want to be. The other thing that I would say is that most successful business owners, by definition, feel successful about how they run their business. A lot of them do not feel, rightly or wrongly, that successful about the management of their own personal affairs. And usually the reason is time. They're so busy running their businesses. I mean, this would probably shock you as a lawyer, but we see it. I got a client right now. He lives in New Jersey, 60 years old, a wife, 3 kids. He's worth $25 million. Doesn't have a will.
Yeah. And for us, we were very surprised to learn that only 1/3 of Americans actually have a will.
Right.
And with the run rate of people getting older, that is going to cause a lot of challenges because if you don't have a will, you still have an estate plan. It's just one that's dictated by the
Someone
jurisdiction.
else is going to make it for you. Right. So the process begins with this, where are we really headed, right? And then typically we walk the client through a process of looking at, in pretty great detail, their financial planning, income and expenses, those kinds of things. We have a very heavy tax focus, so we're very intensely focused on income tax reduction, capital gain tax reduction, estate tax reduction. I think a lot of people, let's just take income tax as an example, and I'll use the worst example. Let's say you live in California. Well, if you're in the highest tax bracket, the income tax rate could be 50%. If I can reduce your taxes, that is a better way to grow your wealth than if I can find you an investment that earns 10% or 20% or 30%. So we're
at what point in time should people start looking at these alternative wealth growth strategies like income tax reduction to increase their portfolio and their net worth? Is it something where you know what, until you have $1 million in the bank, don't even worry about it? Or is this something that someone who literally makes $70,000 a year, average Joe off the street or average Mary off the street, can take advantage of?
So it's going to vary a little bit. And maybe this is too big a number for the audience. I don't know. I mean, income tax reduction, the kind of thing, we could show people a lot of basic stuff that they could do. The more powerful things we use probably start at $500,000 of income a year, something like that. On the estate tax side, and maybe it keys into something we're going to talk about. So the amount of property that one can own today in America and not pay any estate tax is a huge number, right? $13.6 million per person. It's going to go down.
And doubled if you're married, unless there's the re-up in Congress. Yeah.
But I would say tax reduction is only one part of estate planning, and it's applicable to a narrower group of people. Then the other, maybe more fundamental part is, what is my plan to dispose of my assets when I pass? Do I have a plan? Is it written down? Is it clear? Do my heirs know what the plan is? So that's applicable to everyone.
Agreed.
So,
and what we espouse, then the listeners of the podcast know this, is that it goes even farther beyond that of not just your assets, not just your estate, but rather who's going to advocate for you on your behalf if you can't on your own.
Correct.
What happens for your end of life decisions and desires and everything else in between, all the way down to who's going to take care of your pets in the event something were to happen to you. All right. So you ask people what their vision is, you help them gather and collect all of their information about their estate, their assets, liabilities, investments, so you can craft their tax strategy. What's the next step in the process?
So then we would, in the same depth, also look at their investments. Do they have a estate plan? If they don't, we want to get them started on the path to get one. If we do, often what we find is, so we get one step above the person who has a will, but it was done 20 years ago by the lawyer who incorporated their business, and it is not in alignment with the level of their wealth or the breadth of their family, whatever the idiosyncrasies of their situation would be. So probably like you, we don't do estate planning in the sense that we don't write the documents. We look at our role as an educator. If you don't have an estate plan, here's why you should have one, and we're going to help you get to the point where you do. If you do, but it's not sophisticated enough for your assets, here's some things you might consider doing. So we're educators and motivators, I think, in that realm. In one sense, you could solve some or all of the estate tax issue by planning, moving assets around. Some people find complicated estate planning too complicated. And so in those cases, sometimes using life insurance as a way to address estate planning. So again, we don't sell life insurance, but we're very knowledgeable about it. And so we can educate them about the types, the uses, the benefits,
Let's do a 60-second primer for individuals that are listening that aren't familiar with how life insurance can augment an estate plan. What do they need to know?
So there are two basic types of life insurance: term insurance and permanent insurance. Term insurance, think renting an apartment. I write a check once a month or once a year, and as long as I write the check, I get to stay in the apartment that year. But if on January 1st of the following year I don't write the check, I don't get to stay. So term insurance is essentially, you pay usually an annual premium, guaranteed for a certain period of time. And if I pass during that period of time, the policy pays off, right? Those policies are usually used primarily to address kind of short-term emergency situations. So a young couple might buy some term insurance to address two situations. One, the major breadwinner, if there is one, passes, and the family needs some money just to drop out of the sky to help the family get through that. Something that people don't pay a lot of attention to is if you have a married couple, and let's just use a classic old-fashioned family, the wife is the major caregiver, it may be actually more disadvantageous if the wife passes away because the husband's got to keep working to support the family, but who's going to take care of the kids? And the family might need some funds. So we use term insurance in that vein.
And for listeners that have picked up on some of the other podcast episodes where we mentioned, we had a checklist that was followed that someone was able to save $403,000 by following the checklist. And that was because they checked to make sure that their term insurance was not going to expire. They were 2 days away from the policy expiring. Yep. The person was in the hospital. They weren't paying their bills.
Yep.
And because of that, they almost missed this payment. They were able to get an extension by 3 days, overnighted the check, and it all worked out. But that's term insurance. Let's go to the other.
So the other type is permanent insurance, and think buying a house, right? So I'm building equity. In the insurance world, that's called cash value. And super simplistically, there are two types of permanent insurance. One is designed to create on a current basis cash value that you could reach into the policy and withdraw money, most often for retirement income. So some people use permanent life insurance, usually a permanent life insurance called universal life insurance, to build up cash value over time so that when I turn 60 or 65, I can withdraw money. It's a very powerful tool because insurance operates like a Roth IRA. The money inside the policy grows tax-free. You don't pay any taxes on interest or dividends or capital gains. But like a Roth IRA, if I want to take some out and spend it, I don't pay any taxes when I take it out. So I'll say, because I'm not an insurance salesperson, the hardest thing about insurance is the insurance salespeople. And people who are really good at insurance, that's all they want to do because it's really lucrative if you're good at it. But over time, they become convinced that every problem on the planet can be solved by a life insurance policy, which is just not true. But it is a great tool as part of a plan to save for retirement income.
All right.
The second type of permanent insurance is designed to create what we call a death benefit, right? So at any given point, it's not quote unquote worth all that much, but if you die, it pays a big death benefit. And so back to my original point, some people, when they see the documents and the words and all the stuff that goes into estate planning to reduce estate taxes, if I can just write a check once a month, once a year, and know that 20 years from now, if something happens to me, my family's going to get the death benefit paid to them in cash. It's simple and reassuring.
All right. That's a perfect explanation. Thank you.
Sure.
Now, you're going through the process. What are some of the strategies that you've seen for entrepreneurs to avoid the biggest mistakes that they often make? And I'm sure that people come to you and you go, ooh, you shouldn't have done that. What are some of those mistakes?
So, and this would be across the board or specifically
across the board.
Yeah. So, and it will relate to this. I was just talking to two guys today, kind of live in your neighborhood. They have a very interesting company in kind of the medical field. So we always say if a client or a group of clients has a business, send us a copy of what's called the operating agreement. Most businesses today are LLCs, not corporations, because of tax reasons, really. And the operating agreement is sort of like the bylaws of an LLC. So the question comes up, imagine you have a business that has two partners, John and Bill or whatever. What happens if John dies? So what could happen if you don't do proper planning? Bill just inherited as a partner his ex-partner's wife, kids, second husband, boyfriend. So that's not good for the remaining partner. Flip the coin over, it's just as bad for those guys because they own part of a business about which they probably understand very little and are sort of at the mercy of the partner. So what we see this all the time that it's missing. I have a couple in Denver, the same thing, two ladies who own a business. So what you want in that situation is what's known in the industry as a buy-sell agreement. You would put this inside the operating agreement. Very simplistically, it says, back to my example, if John dies, number one, Bill is obligated to buy the interest of his deceased partner. So without regard to money for a minute, that at least means the surviving partner now owns the whole business and doesn't have to do business with the other people. Up only to that point, the family of the deceased partner may not be so happy because they're still stuck in the same position of being sort of silent partner in a business they have no control over. So back to insurance. What we do is we buy term insurance on each of the two partners.
From the company.
Correct. And so in that scenario, what happens is the first partner dies. The remaining partner is obligated to buy the interest of the deceased partner, but we had a life insurance policy which paid him the money that he can use to buy out.
You say obligated. Is it obligated or right of first refusal?
It can be done either way. That's a negotiation. We would probably advise in the vast majority of cases, the obligation version just be, I think the only real issue I think is affordability. In other words, how valuable a business do we have? How expensive is it to buy the insurance? We would be using term insurance, which is typically, if people are not too old, like you and me, it's not that expensive. So like these guys I was talking to today this morning, they're probably 35 years old. So they could buy a lot of term insurance for not a lot of money.
So then is the company, as you advise them, helping them create those buy-sell agreements? Because Freedom Family Office isn't a practicing law firm. Are you identifying and then introducing them to other firms that can help?
Same as I talked about before is we're educating them. We would probably, you could look at 20 different operating agreement buy-sell provisions. They're not that much different. So we would show them a sample agreement so they could see how the steps work. And there's some usually the buy-sell will cover death, disability, and sometimes retirement. So then there are nuances of at what age retirement or what kind of disability and things like that. And yes, because we're not practicing lawyers, we would try and work cooperatively with their attorney, or sometimes what we have to do is find them one because they don't have an active relationship with a lawyer.
Now, tying this back to the core competency of Buried in Work, which is simplifying estate planning and end-of-life tasks, how does your approach holistically tie into that and complement it?
So I would say a couple of things. That whole process that I described, which we call, it's not too artful, but the freedom journey, which is to walk people through a series of station stops, which are all those technical areas, is that they have a plan that's holistic, integrated, and obviously will serve them extremely well while they're alive. But and I'll mention something, I know you do this too. We always have in the back of our mind what we call the fire drill. What happens at the company if just one day the boss doesn't show up for work, for whatever the reason is? You want to have in place a structure and a set of instructions so people function if the boss doesn't show up. So I would apply that same thing, which I think is a big part of what you do, is I don't want my heirs, if something happens to me, to have to figure all this stuff and scrounge here and there for the information, which is can be disastrous. And so,
And that's exactly right. It's our tagline on the side of our estate preparation package.
right.
Leave your heirs the gift of organization. And that's what you're
Oh,
doing on the business side.
yeah. So the same thing. And we have two sheets. One is probably similar to yours. One is the sort of the fire drill for the business CEO,
Mm-hmm.
and a similar kind of thing that often the same person could leave with his family, so that where are the documents? Who's the lawyer to contact? Who's the CPA to contact, right?
Exactly. Yep.
Where are my big one today? Where are all my passwords, right?
Exactly.
So, yeah.
What do you see as the future of wealth management for entrepreneurs, and how can they prepare for it?
That's a wonderful question. I got to think about that for a minute. But
That means I'm out of good questions for the day. I have a quota.
so I think my response would be there are kind of two parts to it. One is an easier part maybe than the other part. So one part of wealth is my stuff, right? My assets, my income, my expenses. And that is something that properly trained, conscientious people, I'm not going to tell you Freedom Family Office is the only firm on the planet that can do that. I think the harder part is, and I don't know what the right word is, but what is my legacy?
Mm-hmm.
Other than my stuff, what is it that I want to leave behind? Do I have values that I want to leave behind? Do I have causes that I want to support afterwards? Things like that. So that may tie back to that idea of rich beyond just money, right? That, and I think most people, they start building the balance sheet and the bank account and the investment portfolio, and you get to, I was telling you earlier, I have a thing going on in my own family where my daughter is suffering. It's not major, but a little medical thing, which is going to screw up her sports schedule. And today I'm like grinding away, doing my work. And I'm really saying to myself, I wish I could just go sit with my daughter for 4 hours. And because if I were to say, what are the most valuable things in my life? It's my wife and 4 kids, and especially that little one, right?
Mm-hmm.
So busy people, and entrepreneurs fit in that category, can sometimes forget about incorporating that. The other thing I think I would say is I'm from New England, and we joke sometimes, those of us who work in the industry in New England, that there's a tradition in New England that estate planning is supposed to be a surprise, right? Yeah. So nobody tells anybody anything. I went through this myself.
Yeah, it's the myth that the lawyer walks into the room, and so many people bring this up, where it's the lawyer with the leather portfolio and the rich mahogany office with the smoke and the reading of the will. It doesn't happen that way.
So I'm old enough. My dad passed away quite young through a sudden weird health thing at 58. And so I was 26 or something. I didn't have I had a general idea that we were doing okay, but I didn't know anything about the actual component. My mother knew nothing. We went to the local bank, met, and that was because this was, I don't know if we'll talk about this, but my dad just had a will, did not have a revocable trust, right? Mm-hmm. So everything is locked up until the will can be admitted to probate. So we go to the local bank, the lawyer's there, the banker's there. So I think there's a part of the process, not only making it clear, but somehow before you pass away, passing along both understanding and responsibility, so people don't sort of wake up all of a sudden and have to deal with all the complexities of that.
We need to get you one of our estate preparation packages, Peter.
Indeed.
It takes care of many of these questions. All right. Final question for you today, because I know that we're tight on time. I want to give you the opportunity to go and spend some minutes with your daughter, as mentioned. What do you hope our listeners can take away from your insights? You know, what's that one thing that if you can implore them to do, or a question that people just don't focus on enough, what is it?
I think in terms of what we do day by day is take the time to get with a competent professional, look through all the components of your life that we've talked about, make sure that they're organized, they're written down, And beyond all the obvious benefits of just doing that, make sure they're designed to create the life you really want. I think so many people it's easy to be busy today because of the internet and email and all that stuff. It's a lot harder to actually have results. And so don't lose sight of what the purpose of all that is, and make sure it keys into, again, what we call the ideal life.
Peter, I think that's a great way to wrap up. If people want to find you or Freedom Family Office, how can they do so?
Super easy. So if they want to visit the website, which has a host of information, surprise, surprise, it's www.freedomfamilyoffice.com.
I love it.
If they want to contact us, there are really two ways. One, they could just reach out to me. My email address is peter@freedomfamilyoffice.com. There is also on the website, probably just like yours, there's a host of educational information. And at various points in the website, if you delve into a subject and then you want to learn more about them, there are little forms you can fill out, right? And then we can set up. Normally what we like to do if people have further interest is just, hey, can we get on a call for 15 minutes and make sure we understand what your issue is and see if we can help you? It's a better way these days than email, I think.
Yeah. All right, Peter, thank you so much for your time. We enjoyed the conversation.
Pleasure.
That
Cool.
wraps up another Buried in Work podcast episode featuring tips and stories from industry professionals who specialize in making estate planning, end-of-life tasks, and estate transitions more manageable. As always, if you enjoyed the podcast, please consider leaving us a review, send Peter an email, follow us on social media, or visit us at buriedinwork.com. And don't forget, podcast listeners can save 10% off products with code BIW podcast. Peter, thanks again. It's been a pleasure.
Thank you, Adam. It was my pleasure.
Thanks for listening to another episode of the Buried in Work podcast. Remember, you can save 10% on our estate preparation package and games with code podcast10 at buriedinwork.com.